Our next guest was calling for gold to hit 1,300 back in August. Now that the metal has finally touched that level, what's next? Joining us in studio is Mike McGlone of McGlone Advisors. Mike, good to see you again. Thanks for being on with us.
Hello. Thanks for having me back.
So let's talk about gold. The metal hit a 15-month high earlier this week, Mike, but is it a time for investors to be worried, or should they sit back and enjoy this ride right here?
It depends on which investors we're talking about. Gold investors, I think, are okay. Gold's finally coming around. It's more risk asset equity investors, I think, are at greater risk, as the headwinds are really continuing to grow in the equity market, and tailwinds are continuing to increase in precious metals, most notably gold and silver. So I think 1,300 is a good resistance for now, but overall, gold's doing really what it's supposed to do. It's helping protect investors in a diversified portfolio.
And I like a quote you said to me offline. We were speaking, you said, it looks like gold's perfect storm may be reversing against it. What did you mean by that?
Well, one thing that really happened last year when we talked about August is a lot of things reversed since then. Gold hit a very extreme in terms of sentiment. It was very bearish. The futures went into a historic backwardation, and things that have shifted since are Fed tightening expectations. I remember we had an interview, we talked about 4 tightening expectations, and I thought that would be wonderful. That's come away. What had the dollar strength, the strength in U.S. dollar as related to Fed tightening expectations, the dollar rally has seemed to have come away and have maybe stopped. Volatility. Look at the VIX. The VIX popped up and it's come back a little bit. One thing that's significant that happened in the VIX is the 50-week moving average crossed above the 200-week, not day moving average, for the first time since September 2007. So a lot of things are shifting. In the meantime, one thing that's really shifted is expectations for central bank effectiveness. And that seems to be diminishing. And one key thing that just happened recently when the Bank of Japan, didn't do anything, when the dollar declined 3% in a few minutes against the yen, that was a bit disconcerting, I think.
So gold touched 1,300, but we're really seeing it struggle to stay above that level here, Mike. So what do you think it's going to take? Is it a question of the Fed? Is it a question of investor demand? Do China and India really need to step up more to the plate here? What needs to happen?
Yes. All the above. It depends on which one, but I think it's more of a sense of what would happen that would to really ruin the rally, and that is a complete reversal back in dollar strength, good organic reason for the Fed to be tightening, which we have seen that they haven't, and they shouldn't. And I think we're going to run into resistance. There's going to be certain levels at the handles, usually 14, maybe 15, and maybe support at 12, who knows. But overall, it looks like the sentiment and the market looks like it's shifted. And it's a question of now it has support to work against. Remember we had that bottom last year around 1,000? And it happened right about when the Fed tightening. So that's a pretty good support level to work against. And for gold to really fail here would take probably more of what happened in 2014-15 when the Fed's tightening in a global deflationary environment, and it seems like the Fed's starting to come around, that's probably not going to work.
So where can you see it headed in the next 3 months, let's say?
3 months, I don't know, but I look at it as where's the value for investors? And still there's tremendous value in gold and silver, and I think investors should be overweighting. There's very strong tailwinds, and probably underweighting and lightening up in the equity market. As far as where it's going to go in the next 3 months, who knows, but we have a nice election to look forward to. We seem to have a complete shift in some of these key things that was pressuring gold before. Fed tightening, U.S. dollar, strong stocks, all that seems to have at least stopped or ended. And if those trends continue the other way, gold should be a primary beneficiary.
Let's talk silver. We saw the metal lagging earlier this year, but now look at it. What is it signaling about the global economy? It's really caught up to gold here.
Well, one thing I like to watch is the gold-silver ratio. When that really takes off, it's usually a bad indicator for the global economy. I mean, if you do the inverse, you can do a chart over it. Gold-silver ratio recently got to near the highs from 2008. And that was a pretty good signal that just silver was just too attractive. And one thing about a precious metals analyst, it's hard to measure and really measure supply-demand trends in gold, because gold is not really a commodity. You buy it and you hold it, and people have held it for years. But silver is consumed. There's really not a lot of supply left, not a lot of inventory left. And the supply-demand trends in silver are very attractive. In addition, the price just got so low. So I think overall with gold and silver, one of the number one things is price, and price got so attractive as equity markets got so high. Silver looks very attractive. It should continue to rally, but silver will have a problem if the global economy continues to really have more weakness, when's the last time we saw an estimate of global GDP that was improved and higher? So that trend still is a bit bearish.
Okay, so major risk for silver if the global economy weakens. Major risk for gold is?
If Fed continues to tighten in a global deflationary environment, the dollar strengthens, and the stock market takes off again. And that's probably unlikely.
Mike McGlone, thanks so much for coming by the studio.
Thanks for having me.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.